Guys, good morning. It's Sean from Max Options Trading again. Just gonna go over the PayPal puts we opened right over here. Which day was this? On Monday. We got into 85 puts. Weeklies we got filled at $2.42 here. Just gonna go over the analysis behind that real quick. So starting from the daily chart, um, obviously we're trading inside this symmetrical triangle pattern. Not only that, we have resistance here, resistance, resistance, and every touch and rejection we got a pretty nice pullback off of that resistance trend line up there. And not only that, looking at this candle right here, we had a three green day straight up rejection, and when we saw a gap down to here, we closed right below the both 9 and 21 EMA, which is a blue and the purple line here for me on the daily chart. And if you sort of go back to see all the reaction that PayPal gave us whenever it closed below 9 and 21 EMA, right over here, so gap down, right over here, so gap down, again right over here, gap down, close right below, gap down. Okay. And also looking at the 4 hour chart here, a little bit more into the chart so we can see more details. Okay. Looking at the volume profile here, we saw gap up here, right? The most recent move. But if you can see, the volume really hasn't been able to really break out of this, declining volume resistance. What that means is that this pump isn't really a real pump, and market makers are most likely using this pump to liquidate more orders to drive the price action back down. So, going back into or going more into the 15-minute chart, what I saw here and what I was actually looking for was a break below this trend line right over here. Okay. And not only that, we see a double top. It's a pretty ugly one, but it still counts. We have a top number one, okay, top number two. And my entry would have been break below this blue zone here, or we get a gap up and fill this gap here. And if we see any rejection confirmations, enter puts right over there. We'll start from the 5 minute chart. I'm gonna actually replay. So obviously during pre-market, see a huge gap up here. Sorry, not gap, but gap down here, right? So I'm thinking, okay, safest entry would be to actually wait for a small reversal, corrective bounce, just to fill the gap or even attempt to test the gap. If we see rejection, bearish confirmations, bearish candlesticks, then I'll get into puts there. Or if we have enough selling pressure at this blue zone, which is going to be the 4 hour temporary demand here, if we see enough selling pressure here, then I'll get puts there also. Of course, if we enter here, we would have a little more, profit target because we're getting a little at the higher, we're shorting it at a higher price, right? But I didn't want to miss out on the play. The setup was really there, and I wasn't afraid to short as long as the demand wasn't giving us what demand zones usually do, which is buying pressure. So I'm gonna play the chart, speed it up a little bit. I got in right at open pretty much. Yeah, little bounce, drop really hard here, and this is demand zone, so obviously we're gonna see some sort of reversal or at least an attempt at a reversal, right? But then we drop first, we break it, the 4 hour demand we're talking about, we break it, we see a corrective bounce up, we try to continue, but we reject. And as I mentioned in the previous videos, whenever we retest a previous demand zone and we reject, it's now going to act as a new resistance or supply. And I pretty much entered this right at open, as you can see. I didn't really update it. I was looking to swing it overnight. So I got in right here at the rejection. You saw gap up, but again, volume is declining. We're seeing reversal, but the volume is declining. It's a fake pump, right? And normally my entry at the retest, I enter at the next bearish candle, which was this guy right over here. Okay. And we pretty much swung this all the way till next day. Just gonna let it play out. As you can see, we're pretty much consolidating. I'm gonna pause here real quick. Okay, so the fact that we're consolidating below the key demand level, what that's telling us is that there isn't enough buying pressure. There isn't enough buyers to push the price back above the demand zone. That's really good if you're shorting because as a bull, you want to reclaim the previous lost support. But in this case, we're not achieving that here. Every retest or attempt to reclaim the demand, we're getting rejected, right? Retest, harsh rejection, retest, harsh rejection. So I ended up holding onto the puts. The next day, open lower. As you can see, I'm gonna pause it real quick. We see another test here, attempted a test. Let me zoom back a little bit. Yep, see a test here, and now because we broke the previous day's consolidation, this area is now gonna act as a resistance. But even right when the market opened, we didn't even see a slight, slight buying pressure, just nothing, just straight red, obviously rejected. That's because we weren't able to reclaim the previous demand zone right over here. And I also found another double top pattern. So that's a bearish pattern within a huge bearish pattern that we talked about on the 4 hour chart. Double top, even on the hourly, double top. And even on the 5 minute chart, you see a double top within double tops. So whenever there is multiple bearish confluences like that, it's a high probability trade. We trimmed this for 65% gains at 343, pretty much right open, and trim more for 100%. And I believe I closed the runner here, PayPal, 4:06 a.m. for me, pretty much right in this candle area for 125% gains. There you go. Hope that helps. I'll have more recap videos coming in for you guys. Thanks.